Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Spencer Israel and Brianna Valesky. And we have Henry Gambell on here of Simpler Options. Henry, how you doing today?
Doing great, Joel. How about yourself?
Doing pretty good. All right, real quick, general market talk. Who thought the S&Ps would be this far back over 2,000 after the flash crash here? Don't call it a triple top at the 2028 level, but how you viewing this resistance in the S&Ps?
Well, I think we're finally here, and I know it's funny because I went back and I was kind of reviewing the conversation that you and I had when we looked at the S&Ps last, and everything looks so drastic, and it's kind of like, this move back up into this zone is kind of what I was looking for. But I think the main thing in reviewing that conversation we had is my sentiment stands exactly the same. You've had this bit of a short covering rally, and you've seen, I think this is just enough to start getting people to think, okay, the water's fine again and everybody can come back in. And I just don't think that's the case. I mean, honestly, I was looking for a little bit of a drop to start the week. That's the monthly expiration, but I'm willing to give that a couple of days and even into the Fed meeting next week before I change that sentiment.
Holy smokes, another Fed meeting around the corner here. I guess we'll talk a little bit about interest rates and bond a little bit, though. But a puzzling chart to me after being gone for a couple of weeks is Apple here. Of course, it's probably has more of a percentage gain off its flash crash low than anybody. But really just finding a home here in the 110 to 112 range, probably typical ahead of earnings. A lot of times you get the nice earnings run, though, but it seems like the Bulls went out and the Bears went out here in Apple.
Well, and Apple is the most curious stock to me right here. And the thing that I think is frustrating about trading it at this exact point in time is what does happen into earnings. Right now, and I know we spoke about that indicator last time we spoke, but you've got the daily squeeze in play, which essentially is just telling me that Apple is about to have a big move. When I step back and I look at that chart, I think, okay, is this really going to be the next big move higher, or is it more substantial to move lower? In my mind, that weekly chart is still broken, and I think it's very difficult to want to be long Apple post-earnings. Maybe you get the little bit of a run higher, and even here as I'm watching it in the pre-market, it's been a little volatile. It was up about $1, now it's down $1, but I have it at a very important zone. I mean, if it gets some real significant buying back above 112, then I think you see that little bit of a, kind of maybe squeeze the shorts a little bit, get a little bit of a run into earnings, but there is no way I'm going to be long Apple when the report is due.
Yeah, when those numbers hit the tape. All right, Netflix post-earnings, and you're going to have the pleasure. I've been gone for a few days. This is the first time I picked up the Netflix chart, and is it in the 80s? Let's see here. No, it's still over 100. What are they talking about? They hardly hit this thing.
Well, the thing that I think is interesting about Netflix, and the reason why I think that it offers more opportunity to options traders as opposed to just outright stock, is you're going to have a lot of indecision on both sides, because I think you're going to find a lot of support around 95, but then I think it's going to be tough to get through 105. It's kind of taken that hit, and I don't know that people are going to be ready to just pile back into it. So there's still some decent premium in the Netflix options. I think working, iron condors, if that's your thing, iron butterflies around 95, just anything to take advantage of premium and not have to choose direction, because that's another thing that's been tricky about this market is feeling like you have to nail direction, with some of the volatile moves you've been having. But instead of feeling that way, just step outside and try to play ranges. And I think Netflix is at a good psychological level where it could stay range bound for a bit, and that's what I'm going to be trying to work in it.
Okay, all right. Let's move on here. CMG, Chipotle Mexican Grill. Never been a fan of their burritos. Obviously, I'm in a minority here. The stock has just had a tremendous run. Back up, still hovering near all-time high. Well, I guess we backed off from the 760 level. Everyone wants growth out of this company. What are you looking at for CMG?
Well, the thing that I think is a little different about trading just outright versus trading earnings is, of course, with options, you have wonderful implied volatility, and there's a lot of things you can do around that. The thing that I try to do with tickers like CMG is set myself up to where I only have one direction of break even. Essentially say, so you can pick a direction and be it bullish or bearish, say, okay, if that goes in my favor, then it can go as far as it wants, and I'll still be profitable. I think that's important to recognize with things like Chipotle, where it very well could move outside the expected move, and trying to nail that is tough. So the way that I'm going to be looking at it, and I usually trade Chipotle with fairly small size because the options can be kind of wide, but I like the idea of playing it down into 700 with something like a broken wing butterfly. So if it pins at 700, you'll do really well. If it falls to 680, which is a little closer to the expected move, you'll still make money. And then if it just completely collapses, you still do okay. And I think that those are the best strategies for that. I definitely would not be doing something like an iron condor in that because of those drastic moves, but I think the broken wing butterflies and other strategies like that are much better around those earnings announcements.
Could you just real quickly, broken wing? We've talked about butterflies, iron condors. Could you just give us your definition here? 718.64. That was the close from yesterday. Give us just describe a broken wing butterfly.
Well, and here again, this may be a little bit too, I guess, conservative might be the word. If I really, kind of price out the expected move and where I'd place this, you might shoot down a little bit closer to 680 or so. But I'm at least going to start pricing out something where you're buying the 710 put, then selling two of the 700s, then buying the 695 below it. And that just sets up a structure so that if everything completely falls apart, while those deep 710 in the money puts will help cushion the ones you're short, and then of course having the 695 as opposed to the 690 gives you that no downside risk. So I think you can take that strategy, and if you are also bearish in Chipotle, say, okay, 700 is too close of a price target, well then do it at 680, and then you're buying the 690, selling multiples of the 680s, and then buying the 675. But breaking those wings is a strategy that I think is very much worth moving into around earnings, because your standard butterflies, you have to pretty much nail it kind of right there at the body. Trying to nail something that has the potential to move $40 or $50 after earnings isn't easy. So I just try to stack the odds in my favor that way.
Okay, real quickly here, oil stocks have moved up, but not crude here. Nice rallies in Chevron and Exxon Mobil. Give us your take on the crude market and taking a look at some of these stocks as well.
That's another one that I think has made its run. I mean, the last time we spoke, I was looking for a move in crude back up into 53, and it took its sweet time getting there. And and honestly, it didn't quite get all the way up into it. 51 ended up being about the high on that. But I think crude oil is getting ready to break. I mean, that is one that here again, if you really had to force me on it, I'd say that probably not trade it because it's still a little tricky. But we have seen for the past couple of weeks that crude has kind of moved with the S&Ps. I feel the S&Ps at the very least are due for a pullback, and if crude can break back below that key level at 45, that's what I'm going to be using for a little bit more of a bearish take in equities as well.
Give it some room, let it prove it to you. And just real quickly, did mention a Fed meeting come up, interest rates. They really threw a monkey wrench in the machinery there. Are they finally going to pull the trigger at this meeting?
Well, and it's interesting because I mentioned that when we started the call, and I do think it's worth pointing out that I think a lot of this stuff will be non-events, and to base your trading entirely around those events is very difficult because the rhetoric around it and all that is very, very difficult to interpret. But what I think is somewhat interesting is you have Apple earnings on Tuesday afternoon or after the close, and then you have that meeting the very next day. So I'm just kind of wondering if maybe the two can tie into each other. That's very speculative, but I don't think it's going to be any type of a change in rates. I think it just might be something that is a catalyst, and then they continue to be so terribly indecisive, and I think the market's getting tired of that.
Okay, all right. Thank you, Henry Gambell of Simpler Options. Thanks for joining us here in Benzinga's Pre-Market Prep.